Hello everyone, how are you? It's Kay. So welcome back to my another video on my YouTube channel. So today I will be sharing the Sakata Goho, which is the original candlestick patterns which was created by Munehisa Honma, the creator of the candlesticks. So today especially I would like to go deeper into these three patterns out of 5, which are Sanzan and Sansen and also Sanku. So first of all, what Sakata Goho means is that Sakata means the name of the place in Japan, which is in Yamagata Prefecture, kind of like a north part of Japan. It's a name of the place where Munehisa Honma was born. And then Goho. Go means 5, number 5 in Japanese, and Ho means strategies in Japanese. So Goho means 5 strategy, and Sakata is the name of the place. And these are the 5 strategies. So I will be introducing Sanzan and Sansen and Sanku today, because these top 3 are categorized into trend reverse patterns. And the rest of the 2, Sanpei and Sanpo, are a trend continuation strategy. So whenever you see these 3 patterns on the top, then this implies that the market reverse. So let's say if the market was bullish, and when you see these patterns, then it implies that the market reverse goes opposite direction. So first, today on this video, let me emphasize on these 3 patterns as the trendy reverse, and on the next video, I would like to introduce the rest of the 2 trend continuation patterns. So yeah, I will focus on the trend reverse patterns on this video today. Okay, so first, let me introduce Sanzan. And Sanzan, this means San means 3 in Japanese, and Zan means mountain in Japanese. So Sanzan means 3 mountains in Japanese. So as you can see on this diagram, there are 3 tops, 1, 2, 3 tops. And Sanzan is usually called a triple top or triple bottom in English. So 3 tops at the same or similar level, and that's called the Sanzan structure. So whenever you see this pattern, the market may reverse. So I have actually put 2 examples. This one is the triple top example. So the market was bullish, and then when there are 3 tops, 1, 2, 3 tops, and then the market reverse. So this is an implication of the resistance has been here, and the market doesn't break the resistance, but instead it just goes reverse, backwards. And again, I mentioned here that 3 tops at the same or similar level. So 3 tops doesn't have to be exactly on the same level, but if you get the rough sketch of around the same price level, 3 tops are there, then that's called Sanzan. And same is true on triple bottom here. So this example, let's say the market was downtrending, and when you see this pattern, 1, 2, 3 bottoms, and then the market goes up bullish. So when you see this pattern in any time frames, then it tends to work very well. And I use this strategy also on my entries and exits. So that's called Sanzan structure. Okay, another variation of Sanzan is this one. This is called Sanzon Tenjo, and it's actually head and shoulders in English. I think this is a very famous pattern of the candlesticks. So 3 tops with the middle one sticking out. So like in this example, you see this is a head and 2 shoulders when you see this, when it was bullish, and when you see this, the market tends to reverse, goes down this way. Or when the market was downtrending, and when you see this Sanzan, inversed head and shoulders, then it tends to reverse. These patterns are not 100%, of course. There are some exceptions and also depends on higher time frame conditions. But if you know this pattern, and when you see this, then you can decide not to take trade, for example, and wait for the next N wave, for example, to buy. Or you can buy maybe at the neckline, breakout. Or let's say if the market goes bearish, then this whole thing becomes a fake, so you can follow downtrend on the next one. You can place a sell and follow downtrend on the next scenario. But for now, let me just focus on these basic patterns and basic explanations, because if I go deeper, then it may confuse you. So for now, just remember that these are considered to be the trend reverse patterns. So that was Sanzan, what I introduced today. In later part on this video series, I will be showing more and more live market examples about these patterns, so that you get more deeper understanding of these patterns. But for now, today, let me explain these based on these screenshots. So that was Sanzon Tenjo in Japanese, which is head and shoulders pattern, which is pretty famous among the traders. So next, let me introduce Sansen. And Sansen is a 3 candles pattern, and there are so many patterns. And San means 3 again, and Sen means river. So this is like 3 rivers in parallel together. So that's why it's called Sansen. And Sansen completes on the 3rd candlestick. But if you see these first two candlestick patterns, then it implies that the market reverse, and wait for the next candlestick close, and then it completes the Sansen. So let me give you some of the examples of Sansen. Basically, there are 5 patterns of Sansen, and that is this one. So first, it's called star. Star means, let's say all examples are bearish to bullish examples, but as I mentioned here. But star means this doji candlestick. So the market has been bearish, and then after the last bearish bar, it appears the doji candlestick, and this particular doji is called the star. So when you see the star, then it implies that the market reverse. So this is one of the patterns in Sansen. And the next one is called harami, or inside bar. So inside means, let's say the market has been downtrending, and on the last candlestick you see the blue bearish bar, but this blue bearish bar's high and low includes the next candlestick, and this is called harami, inside bar. And Tutsumi is like this pattern. This is called outside, kind of against opposite from inside bar. And then another type is called Kirikomi in Japanese. And then other type is called Takuri, or we say Takuri-sen in Japanese. But let me get into these 5 basic Sansen patterns one by one. So first, star. Again, star means the market goes bearish, and there is a big blue bearish bar, and then doji appears. So this particular candlestick is called Sansen, star, and doji, this candlestick doji itself means consolidation of the market. So let's say this is daily time frame. So each candlestick is 1 day. So the market has been bearish up until yesterday, but today the market is consolidating and the market is deciding which way to go, whether it's bullish or bearish. So doji itself means that it's a consolidation signal of the market. So if next candlestick becomes bullish bar, then it's called Sansen Ake no Myojo, which is a type of the Sansen strategy. So let's say the next candlestick becomes bullish, and especially if it breaks the previous doji high, like this way, if the next candlestick close above the doji resistance, then this is called Sansen Ake no Myojo, or in English it's called the morning star. And in opposite direction, if bullish to bearish pattern with star is called Sansen Yoi no Myojo in Japanese, and in English it's called evening star. But basic idea is that the market has been downtrending, and you see the doji on the bottom, and then this implies that the market reverse, especially if you see the bullish bar after this which closes above the doji, then this can be the market reverse pattern. And this is one of the Sansen patterns of Sakata Goho. Okay, I hope that makes sense to you. Okay, so next pattern is Harami inside bar, which is this one. So we say in Japanese it's called Harami, but in English it's called inside bar, engulfing inside bar pattern. And I used to have some videos about other candlestick videos, and I was saying Harami, this is the Harami pattern in Japanese. But when I say this in India, I heard it's bad language, so I tend not to say this in live streams. But here, since this is original word in Japanese, let me just use this word as explanation purpose. So Harami pattern is, let's say the market has been bearish, and then bearish bar, this bearish bar's high and low includes the next candlestick high and low. And this is the Harami pattern. If this appears at the bottom of the market, then it implies a reverse to the bull market. So this is another type of reverse, trend reverse pattern on Sakata Goho. And just like star, you can, it's better to wait for the breakout of this inside Harami, bullish. Wait for the next candlestick breaks the resistance of this high and low, high or low, especially in this case. If it breaks that resistance of this inside, then it tends to reverse. Of course, it's not 100%, but this is the pattern that you can see at the bottom of the market. When it's at the top, it's vice versa. So this is the Harami, one of the Sansen patterns of Sakata Goho. Okay, next one is the Tutsumi, which is called outside bar. So opposite from Harami, the market has been bearish, and last candlestick may be bearish also, but the next candlestick high and low includes the one previous candlestick. And this is called Tutsumi outside bar structure. And in Japanese, it's also called Daki-sen or Daki. But if you just understand it outside bar, I think that just be fine. And again, small bearish candlestick is included within the next candlestick's high and low. And this pattern implies that market reverses from bearish to bullish. again, if you could wait for the next candlestick close above the Tutsumi, then the probability becomes higher for the market to reverse. So that's another type of Sansen in Sakata Goho. And also this one too, Kirikomi. Kirikomi means so the market has been bearish, and you see the last candlestick bearish also, and then the next candlestick becomes bullish. So after a big bearish bar, next candlestick starts exactly from the bearish bar's close. So this is the bearish bar's close, and the next candlestick starts exactly from the close of the bearish bar, and this becomes the bullish bar. And this implies that the bearish momentum is getting weaker. And this pattern from bullish to bearish is called kabuse in Japanese. If it's up, and when you see this, then this pattern is called kabuse in Japanese. But this implies that the market downtrend in this case is weaker, so that again, if the market starts to be bullish, then it tends to reverse. So this is another type of Sansen in Sakata Goho. Okay, and the fifth one, the last one, is called Takuri. And Takuri means a candlestick with long wick pointing down implies a trend reverse from bearish to bullish. So let's say the market has been bearish, and you see the candlestick bearish also, but the most recent candlestick appears the long wick and smaller body, and this implies that the market reverse. Again, if you wait for the breakout of this, what we call pin bar, if the next candlestick close becomes above the pin bar, then it's more likely that the market goes bullish on the next move. So that's another type of the market reverse pattern. And if this pattern appears at the top of the market, it's called kubitsuri or hanging man in English. So let's say the market goes up and bullish bar, and then bearish but long wick like this. And this also implies that the market reverses from bullish to bearish, especially if the next candlestick becomes below the close of the pin bar, then it tends to go down after this. So these are the 5 basic patterns of Sansen, and based on these 5 patterns, there are so many other variations. So the other patterns are like this, all from bearish to bullish patterns. So first, 2 stars. So we saw star. Star was this one, doji candlestick on the bottom. But sometimes you see 2 stars like this. So when you see downtrend and bullish bar appears and 2 stars, then it tends to go up this way. This is another type variation of the reverse pattern. And also Sansen Ake no Myojo. This is where you wait for the close, the market bearish, and there's a pin bar, and then you wait for the next bullish bar appears. And this tends to be the pattern of the market reverse also. And another variation is called Tsubame Gaeshi. And this one is the market has been bearish and bullish bar appears, and then doji and pin bar, and the market goes bullish. So this is a combination of inside harami and doji and pin bar, and then the next candlestick breaks all these confirmations. So this is one of the powerful confirmation for the market reverse. Okay, so that's called tsumabe gaeshi in Japanese. And then another type is called ryo Tutsumi. So ryo Tutsumi means, Tutsumi means inside. So here, this let's say the market has been bearish, and there is a bullish bar appears, and then this bullish bar's high and low includes the two future candles, and this is called harami. And then the next candlestick breaks the harami engulfing. So this is also called harami engulfing breakout. But also, since there are like two engulfing bars, this particular pattern is called ryo Tutsumi. Or sometimes the last bar, this white bullish bar, is closed above the harami, which is a good sign of the market reverse. But also sometimes you see the market open starts from here, and then this becomes an outside. So inside to outside pattern is also called ryo Tutsumi. And when you see this, that's also a very powerful confirmation for the market reverse. So when you check charts, you can look for these patterns, and you can take this as your entry confirmations. And next is daki no ippondachi. So this is the market has been downtrend and the market range, and then bearish bar appears, and then the next bullish bar includes everything. So that's called outside bar. And then the last bullish bar starts from the previous bar's close. Starts from the previous close, and then it includes all these previous candles. So this particular type of pattern is called daki no ippondashi, and this is also a type of pattern of the market reverse. Okay, and finally, double Takuri. Takuri means this one. Hold on. Okay, hold on. Okay, this one. So Takuri means the pin bar, bullish bar, and then pin bar, and the market tends to reverse. And this is called double Takuri. So when you see two pin bars, then this also implies that the market reverse. It can be triple Takuri or multiple Takuris on the bottom of the market, and when you see that, that implies the market reverse also. And there are so many other variations of this Sansen, because Sansen is the backbone of his candlestick patterns, and he has been using these candlestick patterns to trade rice in Osaka, and he became literally the most rich person in Japan. So so these are the 5 patterns of Sansen and its variation. So I hope you get this idea, big picture of these patterns. And then lastly, let me introduce Sanku, which is also the trend reverse pattern. So Sanku is like this, 3 gaps. So this is first bullish to bearish. The market has been bullish, and then when you see this, there are 3 gaps, 1, 2, and 3 gaps, and then it tends to reverse this way. From bearish to bullish, you also see there are 3 gaps, 1 and 2 and 3 gaps, and then it tends to reverse. So this pattern is called Sanku in Japanese. San again means 3, and Ku means sky. sky in Japanese. So 3 skies, 3 windows or 3 gaps. Then the market tends to reverse. So he says when you see the 3 gaps on consecutive candles, then get ready to take a trade on opposite direction. Do contrarian trades, he says, when you see this pattern. And I trade Forex mainly, but in Forex markets, this pattern is unlikely because each candlestick becomes consecutive, one after another, and close and open, close and open. So in Forex, usually there are no gaps, but when you see stock markets or Nikkei 225, there are gaps because the market is not open 24 hours. So when the market closes at 3 p.m. and then when it opens next 8 or 9 a.m., there is a gap between the candles every day. So Sanku is more for the daily stock market strategies. But if you trade stock market, and this is also one of the greatest pattern for the market reverse. So again, today I have introduced all these 3 patterns and its variations. And for me, I have studied lots of candlestick patterns, and also I have backtested it, lots of patterns, but I simply stick to Sakata Goho, especially Sanzan and Sansen structures. And these are also my backbone of my strategy. Whenever I see high time frame analysis, I use Ichimoku Kinko Hyo. So I use 5 lines of Ichimoku Kinko Hyo plus Sakata Goho structure. Then I can understand exactly what's happening within the markets. And for me, I am a trend follower and I do multiple time frame analysis. So when I see these patterns on any time frames from weekly down to 5-minute time frames, it still works. So especially when I take trades based on 5-minute or 15-minute time frames, then when I see these patterns, these are also part of my entry confirmations. So hopefully you also study and backtest and check charts and see if you can find these patterns. When you find these patterns, then take a memo and see how it plays out after this. Again, of course, these are not 100% market reverse patterns, and there are fake patterns. They can be fake, of course, but you can also apply in a live market. Let's say, for example, any patterns like any of these patterns, if there is a resistance or support near this area, weekly or daily supports, then they tend to work better, for example. Or for me, when these patterns appear on one of these Ichimoku lines, then it tends to reverse also. Or when they appear in time cycles, then they may work better. So depends on what you use on your analysis, whether it's moving averages or you may be using RSI or MACD or any type of indicators. When you see potential top or potential bottom in your system, then look for these patterns and the probability for them to work becomes higher in that way. So on the next video, I will be talking about the trend continuation patterns, which are Sanpei and Sampo. And then on the next video, I will be introducing some of the live market examples, and then also more practical applications of these patterns in your day-to-day analysis and trades. So I hope you continue to enjoy this candlestick video series, and please continue to learn and also continue to check these patterns on your own among the markets, so that when they appear next time, you can take trades with confidence. So, thank you very much. Stay healthy, stay safe, stay gold. I hope you become a non-losing trader. In Ichimoku community, I share the original knowledge of Ichimoku. In KTS Academy, I share my original strategy including risk and psychology management. In GTS, I mentor your trades and follow up one-on-one closely for the 3 months. Take a survey to find out which course suits you the best. Thank you very much for watching the video until the end. If you liked it, please press like button and please subscribe. And until I see you next time, please stay healthy, stay safe, and stay gold. Bye for now. Mata ne. Thank you very much.